How's it going, everybody? In today's video, we are going to be going over our number one buy and number one sell currently listed in the Edge Finder. We're also going to take a look at the COT data and retail positioning as well. So let's go ahead and hop into both of those things before we actually break down our number one buy and number one sell currently in the Edge Finder today. So taking a look at the COT here, right off the bat, I'm taking a look at gold. Gold is the most long asset from smart money traders right now, currently at 77% long. And our most long currency is actually the pound at 62.92%, followed closely by the euro at 59.07. The dollar is very 50-50 in the minds of smart money traders, but then they are shorting things like the Japanese yen here at 71.54%, as well as the Australian dollar, 73.89% short there. If we take a look really quickly at our latest weekly COT filing, we can look at the difference between last week's COT report and our most recent COT report. I should mention also really quickly, COT typically gets updated on Fridays. And so if we actually look at our data sources, our data updates and sources tab here in the Edge Finder, this is a really cool underrated tab that will actually show you how often and when the last time everything was updated. So we can see that COT data, our last update was on February 9th. So that was actually 1 week ago on Friday. It's checking weekly. This news comes out weekly, but in case there are changes, it is checking every 12 hours for that information. So our next update is going to be about 3 hours from now. That should be when the newest COT data is released. I know that Nick and Frank typically like to go over COT on Monday. When they get into the office and do the live stream together, they'll go over the newest COT reports on Monday. So keep in mind that this is getting updated most likely a little bit more later in the afternoon here, but we can still go over this because there's still some interesting information here. The most important thing that I want to look at, well, there's two different things I want to take a look at really. I want to take a look at the New Zealand dollar up here at the top of the list, and I also want to take a look at the euro. So what we're looking at with this latest COT filing page, again, like I mentioned, it's comparing the last COT report to the most recent COT report, and it's looking for the changes. So what we saw with the New Zealand dollar was a positive net percent change of 3.1%. And what that means is we can see the changes in long and short contracts. That's what this is right here. This is the total amount of long and short contracts, but this is the changes from last report to the most current report. So what we saw change was smart money traders opened up over 2,000 new long positions. And they did still open a few short positions, but not nearly as many. 144 short positions opened compared to 2,014 long positions opened. So beforehand, the New Zealand dollar would have been much more heavily favored to the short side, but now it's sitting around 50-50 because of it seems like their sentiment is changing on the New Zealand dollar. And we'll have to wait and see for this most recent COT report to come out here again in a few hours to see if their position has changed even further and they are even more long on the New Zealand dollar than they were this week. The other thing, again, euro. So we're looking at the same thing here, except in the opposite direction. What we see here is a negative 5.16% net change difference on the short positions here on the euro. So we can see, again, this is the number of short positions opened. This is the number of long positions opened. So even though there are still more total long positions on the euro, 202,000 long positions open on the euro currently compared to 140,000 short positions. Look at how many short contracts smart money traders opened on the euro. This is a huge difference. Smart money traders still opened 2,000 new long positions on the euro, yes, but they opened 28,700 short positions on the euro. So that drastically changes the long and short percentage on the euro, where beforehand the euro was very heavily favored long. It's now actually dropped below 60%. 60%, if you don't know, is kind of the magic number in the edge finder. When it comes to our retail and COT sentiment, if we are over 60%, that's on the long side or the short side, that's when we actually give it a score. We want it to be clear and obvious. We want it to, no questions asked. It's favored one direction or the other. If we're still sitting in that 50% range, it's too close to 50% for us to say that they have a majority bias one way or the other. So with these 28,000 new short contracts that we see on the euro, that dipped our long percentage under 60%, which is interesting. And clearly their sentiment seems to be changing on the euro with that many short contracts opening. I'm very curious to see what the most recent COT is going to have in store for us. But that's it for COT positioning right now. Let's check out retail positioning really quickly.
We have 4 brand new indicators built for TradingView. Introducing the momentum, extension zones, trend projections, and volume spikes indicators. All 4 indicators work on every TradingView chart and time frame. You can easily see shifts in bullish or bearish momentum. Look and see if price is being overbought or oversold, which could cause a quick reversal. Automatically get a trend line that shows the true trend, bullish trend, and bearish trend based on the most recent market data. Get notified instantly of big spikes in volume to help you find breakouts. All 4 are available now at a1trading.com and can get set up in just a few minutes. Go check out our brand new line of TradingView indicators today.
We're going to check out our major currency pairs first. Here's our US dollar pairs. And right now, retail traders are heavily long on USD CHF as well as AUD USD. We can see they both cross that 60% threshold, and because of that, that is actually a bearish indicator for us because the crowd is so heavily long these two assets. We may look to short them. On the inverse here, we have USD JPY, which is heavily shorted by retail traders, and that is a bullish indicator for us because the crowd is so overwhelmingly short on USD JPY at the moment. Now let's go ahead and jump back into our top setups page. I'm going to remove any neutral biases that we have, and we are left with a fairly short list of bullish and bearish biases. No very bullish or very bearish biases, but that's okay. We still have some solid scores here. And we're going to stick with currency pairs, so we're not going to look at the German 30, even though it has a nice +8 bullish bias here. So our next pair up would be Pound Aussie with that score of +7. And we have 3 that are tied here for our most bearish bias, all scores of -7, Euro Pound, Aussie NZD, and CHF JPY. But you know, I'm actually curious to look at Euro Pound because of how heavily shorted the COT positions were changing. All that Euro COT stuff that we just went over, that has definitely piqued my interest in the Euro to the short side. So matter of fact, why don't we even start off with that pair? So let's open up Euro Pound here. There it is. And Euro Pound has a score of -7, like I mentioned. COT data, a score of -1. And retail sentiment is also a score of -1. So what we can see here by taking a look at this, we've already mentioned that the euro is, it dipped below 60%. So we no longer consider this to be long. However, they are over 60% long on the pound, which means that that is a bullish indicator for us. Both recent changes were both negative, so they both had more short contracts open than they did long contracts. However, the drastic difference in euro short contracts is definitely something to pay attention to. -1.21 does indicate a shift in how many long and short contracts they opened, but that -5 number is a really, really big number like we just saw. Retail sentiment, retail traders are favored long on euro pound right now, 67%. And again, that is why it's giving us our -1 score here. Seasonality is also a score of -1. We can see that in the month of February, historically speaking, when you average the last 10 years together for euro pound, you notice that in the month of February, typically it trades lower. Trend reading is a score of -2, and we can kind of get a good idea of how it's been trending just based on the Edge Finder scores. So this score indicator up here is the day-by-day score, whatever the market closed at, whatever score the Edge Finder had for that asset. This is what we're keeping track of here in the score indicator. But if we actually want to take a look at the price chart, we can do that as well with price forecast. So we're going to pull up euro pound. Let's see, euro pound right here. And yeah, we had a huge dip on February 14th. We have rebounded since then, but other than that, it's just kind of been ranging. We peaked here at February 5th. Well, in fact, actually from February 1st to February 5th, it was certainly trending higher. And since then, it's failed to meet those highs. It looks like it's meeting a level of resistance right here. In between the 0.85, 0.86 range. That's where price is trading at. This seems to be a significant level right here. Again, we dipped really low on February 14th. We have bounced back, but price forecast predicts that this asset will continue to drop lower. Hopping back in here, we're going to finish up with our fundamental numbers. Economy and interest rate scores are neutral, but inflation and labor market scores are both -1. We have all those numbers right down here for you. So Euro GDP growth, 0% compared to -0.3% in the UK. MPMI, 2.2 compared to 0.8. Retail numbers, -1.4 compared to 6.7. Inflation, 2.8% compared to 4%. Unemployment numbers in the euro area, 6.4% compared to 3.8%. And interest rates on the euro are 4.5% compared to 5.25% on the pound. So that's all the numbers and data backing up that -7 bearish bias score here on euro pound. The other pair that we said we were going to take a look at, I believe, was pound Aussie. That had a +7 score. Yes, it did. So here we go. Pound Aussie bullish bias score of +7. COT data is a score of +1, and retail sentiment is also a score of +1. So pound, again, favored on the long side, 60% there. We like that. Australian dollar favored on the short side. We like that as well. But then the recent changes, we do have a negative recent change for the pound, but that's okay because they are still favored over 60% on the pound right now. There wasn't too much of a change to dip it below 60%. Retail sentiment, retail traders are 64% short on the pound Aussie pair. And again, that is a bullish indicator for us. Seasonality is a score of +1. And here we go again. In February, over the last 10 years, historically speaking, pound Aussie typically does perform well in the month of February. Our trend rating is actually a score of -1. Now, if we take a look at the score indicator here, it doesn't really seem like that because we've been sitting at a solid bullish bias here. But let's look and see what pound Aussie has to say on the price forecast chart. So pound Aussie had a nice move to start the month. We had a nice little uptrend here. We dipped down a little bit, but then brought it right back up, dipped down again, and then peaked on February 14th, actually. But because of that peak, it dipped a lot lower. So pound Aussie, this was most likely because of a news event. It probably got overbought, and that was the reason for such a hard sell-off. That can happen sometimes in the markets. We actually have an indicator that we sell for TradingView. You can find it on our website called the Extension Zones Indicator. I'll throw it up on the screen here for you right now just to show it off a little bit. This indicator is so cool because it shows you automatically when price is considered overbought or oversold and is due for a reversal. But moving right along, we're going to finish up with our fundamental numbers here. We have an economy score of +2, inflation score of +1, Interest rates are a neutral score, and labor market score is +2 as well. Now, we already went over these numbers for the pound, so I'll skip past that and just focus on the Aussie here. Australian GDP growth 0.2%, MPMI 2.5, retail -4.3, inflation 4.1, unemployment 4.1, and interest rates 4.35%. So there we go. That's all the numbers and data backing up our bullish bias on pound Aussie. I hope you guys enjoyed this video. If you want the Edge Finder for yourself, there are so many other useful tabs full of information, data, charts, all this stuff to make your trading easier. If you are interested in getting the Edge Finder for yourself, you can find it in the links down in the description below or on our website, a1trading.com. And if you do want to get it for yourself, you can get it at a discounted price when you use promo code A1YT at checkout.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.